Check, please.
Hey guys, welcome back to Everything Money. In this video, we'd like to discuss two investing strategies that you could have done in the past year. If you followed the hype train and followed some hype investors talking about Palantir and got into that a year ago or sometime this year versus something very simple as just staying in an SPY, very simple ETF. We're going to talk about these two paths you could have gone down and where it would have taken you. I bring in Paul Gabriel and Mo. Welcome in, boys. How are you?
Guys, 1 year is too short term to look at things. We've gotten into a YouTube battle with some big hype guy about Palantir. I believe in Peter Thiel a lot. He's a brilliant man. He started this company in 04, 03. It's just too expensive. Just like I like Tesla, but it's too expensive. I love Elon Musk, too expensive. I love Jeff Bezos, too expensive. I love Amazon, too expensive. I can love the person, the company as a company, but not like the price. It's been proven time and time again. If you overpay for something you fall in love with, you are going to end up hurting. Hurting can still mean making money, but not making as much money. SPY is up 20-some% this year. Palantir is down 30%, down 60% from its peak. Great. That's just maybe a fluke. I don't know. But the point is, we're trying to teach a process that if you overpay for cash flow, if you overpay for revenue, you will end up not doing as well in long periods of time. Is that a for sure? No, I was wrong on Amazon. I didn't think Amazon was going to grow like it grew in the last 5 or 6 years. Okay, that's fine. But this process works over long periods of time. And it's been proven time and time again that every single year, only 82% of mutual funds do not beat the stock market. And over a 10-year period, it's practically like it's even lower. It's what, 0.5%, 1%? Why even try to fight that? Just go put your money into an ETF, follow the S&P 500, and go to sleep well at night and know that you're betting on the U.S. economy. That's it. You're just betting on the U.S. economy because the S&P will do pretty much as well as the U.S. economy does over long periods of time. And the U.S. economy is still the number one economy in the world. As much as we're going into socialism, we're still less socialist than most of the other countries in the world. I'm okay with that. So at the end of the day, you can pick individual stocks, and Palantir has just been an overhyped stock. It's a company selling for 26 times sales, even though the average software company sells for between 6 and 7, 6 and 10 times sales in this overpriced market. I just think there's going to be a come to Jesus moment at some point with Palantir. Doesn't mean the company's going away. Doesn't mean the company's going to zero. Doesn't mean any of these things. But what it means is you're overpaying for growth. Mo, what do you think?
Paul, you've talked about, I get both your opinions on this. Paul, I don't see often the concept of managing downside risk. And this has been a newer topic that we've been bringing up because it was new to my mind, the idea of like, yes, I want to gain percentage on the upswing, but also not losing. And so you've said multiple times on the show that you haven't invested the stockpile of cash you and your company has had sitting around in the past few years. And it seems so obvious now that the idea that you're not buying things when they're overpriced, but sure enough, you remember with these concepts like Grant Cardone brought up about I'd rather get 6% than 0. You might have very well been sitting on 0% this year, but you didn't lose almost 60% on a dumb play. Talk about that concept.
It gets so inside me when I hear people say that they think they're being smart. 6% is better than 0%? Really? What if 6% is at the expense of possibly losing 50%? I'd rather just wait. I want to make the bets when the odds are heavily in my favor. On companies like Palantir, the odds are definitely not in my favor. If I buy 100 Palantirs, it's going to be ugly. I might find the one Palantir that goes to the moon, and yes, but guess what? You'll lose a ton of money in the future because handling money is different than making money. And when I hear this, I just go, this is just not a lack of understanding of what it takes to make money. It's a lack of understanding what investing is. Process is investing. Following a set process investing. Mo has a process for his day trading and long-term trading, all that stuff. That's why it works. Does that mean that every single trade Mo does works? No. But definitely over long periods of time, just like people who count cards at blackjack, there's a reason why counting cards is now banned or has been banned by casinos because it works over long periods of time. And what is that edge? It's only a 0.5% edge on the house. It's only a 1% edge on the house. That's it. But you do it enough over long periods of time, you make a lot of money. That's it. If you don't get that, you don't understand sports. You don't understand living in general. You don't understand anything if you don't understand that concept. If you don't understand that concept, all the more reason why you just need to turn your brain off, buy an S&P 500 ETF, and go to bed at night and not look at stocks because you're only going to cost yourself money in a long period of time. That's just it.
Paul, we've shown in past videos for Palantir that we need to get this price somewhere in to get a desired return of 12.5% moving forward. We need this price up in the $5-7 range. Will you be a buyer of Palantir in that range?
I don't have to run the numbers again.
Mo, what about you? What do you think about this?
If Palantir's around for 20 years, I'm quite sure at some point I'll be a buyer of Palantir.
See, that's the thing for me. The company has not been public that long. Let them get their feet. Let them become, even if it's in that $5-7 range, I probably won't be buying because I want a track record. I want them to prove that they can do this for a little bit of time before I get into them. I am a kind of person that would rather wait. Instead of trying to catch it from very, very bottom, I'd rather catch them somewhere in the middle where they've been doing it for a while and then make gains towards the top. Because if they're a good growth company, I can still buy them, but in the midst of them growing, not hoping that they start growing. And then, I was reading something from Charlie Munger yesterday. You were talking about mitigating risk. He basically said, there's no punishment for not making a move. There could be punishment if you do make a move. And that move could be big to the downside. And we've seen that with Palantir. I'm looking at my chart right here. On January 27th, we had an intraday high of $45, and today it's at $19. So, and today that wasn't even the low. The low that it's been this year is May 11th, and that was $20.
Looks higher.
I guess it's there now. So, I mean, just guessing and hoping and throwing Hail Marys is not going to work out for you in the long run. You're going to get lucky on some, but it probably won't overcompensate for all the dumb decisions that you're making. You're not better than the Charlie Mungers out there. I'm sorry. You're just not.
By the way, you're not only that, you're not better than the market.
You're not better than the market.
You're just like, literally, I'm not trying to be cocky. I will bet my life that over long periods of time, I will beat the market because I have that discipline to do so. And I want you to learn that, but it takes years. It took me years to get that discipline, and I'm still learning it every single day, every single week. Look at me. I can't even accept the fact that moron YouTubers out there who are so stupid don't even get this. That bothers me. That's proof that I need to learn more about patience. I've learned the patience of looking at the stock market in general, but the one-offs, I'm still working on my patience. I'm still working on my discipline. And I'm constantly, and I'm sure Munger is doing the same thing. I do disagree with a little bit. There is a price to be paid by sitting out. You can't sit out forever. But when the odds are heavily in your favor, that's when you go all in. Not when the odds are not in your favor. It's about understanding when the odds are in your favor and when they're not in your favor. That's the big thing. Unlimited pitches is what we're looking at. We're at the plate. We get unlimited pitches. Only swing when it's in your sweet spot. Problem is, people can't sit there and do nothing. I can sit there and do nothing all day. I'm really good at it. But most people are not. And by the way, I'm not very good at it. But that's why I have hundreds and hundreds of units of real estate going to thousands. That's why I have 8 or 9 businesses upstairs that make me cash flow every single year. Because I'm able, that's what I do to avoid myself. I do options as a way to avoid myself from making stupid mistakes. I'm doing day trading now where I'm setting $500,000 of my own money day trading. That's how I'm going to keep myself busy so I can be patient other ways. Understand yourself first and then do actions that allow you to be patient, that give you a reason to be patient later. And that's what I do.
We hope that you've noticed, if you've followed any of our videos, that we like to stick to what we think are the financial facts. We have a long-term play of discipline and good decision makings on a day-to-day basis. We are not going to spam you with these titles talking about massive updates. We're not going to update a company every 5 minutes with breaking news. Meanwhile, when we have a 10, 20-year mindset. So keep that in mind, guys. If you're getting spammed by breaking news on companies that have no breaking news at all, they're probably just trying to use your clicks to make money, which we necessarily don't need. Paul, you have 9 businesses. Mo, you have enough money to retire on. I have multiple businesses outside of this running. So this is what's behind our channel, and you can see this in basically all of our videos for the past 3 years.
We created all this software because our users wanted to be able to analyze companies without having to wait for us to make a video. This software allows them to do that. The things you get with this software, you get everything on this main page, the 8 pillar, all these tools right here, plus all the stuff coming. You get exclusive daily content. That's 1 to 3 videos a day that made by us just for our users. You get access to Seth, Mo, and I. You get 30 years of financial data, over 30 years of financial data. But most importantly, you get access to our community. So our community is over 6,000 people who've already bought this software. It's in a very organized chat. You can go in there and talk about everything imaginable, even crypto, even Tesla, all your value investing ideas, even personal lives. We have people in there that are friends now. It's an incredible community. Join. All this is available for only $1 per day. There are 2 ways to sign up: everythingmoney.com or Patreon. The benefit of signing up directly with everythingmoney.com is we are not big enough to charge sales tax yet, so you're going to save on that sales tax for a while. And the other good news about the software is if you sign up today, every month the price to new subscribers goes up. So whenever you get your price, that is your price locked in forever. So this month it's $1 a day. Next month it's going to be higher. Last month it was lower. So when you sign up, we have people who are paying like 25 cents a day right now because they signed up so early. So sign up now, $1 per day, less than a cup of coffee, gets you access to all of this. If you can change your returns by 1 or 2% to the positive or decrease your losses by 1 or 2%, this will yield hundreds of thousands, if not millions of dollars, $1 per day. Sign up now.
That is our take on Palantir. If you can't handle the heat, get into an ETF, which we highly advise for most of you. So that's our take. Final thumbs up. Join our community. You can get our software, yada, yada. Watch more videos. You'll see all about it. See you next video.